Welcome to these TAT Letter 105 video lectures. My name's Lorena Britz and I'm one of your postgraduate tax lecturers. Have a look at the topics for TAT Letter 105. Where exactly do these topics fall into the framework for the calculation of taxable income? Well, you have already covered gross income, as well as exemptions to gross income, giving us income. We are now looking at the deductions and allowances section. Obviously, your taxable capital gains that you would have looked at in TAT Letter 104 are also now relevant. We will also be looking at the deduction in terms of section 18A, qualifying donations. With these questions, it's important to remember to check the required part of the question to see if the required asks you to start your calculation with net profit or income before tax. If it does ask that, it is imperative that you start there and adjust for accounting items that have no tax effect or where the accounting and the tax effect differs. Starting with the general deduction formula and also having a quick look at some of the prohibited deductions. The general deduction formula is contained in section 11A, which has all the positive criteria, and it must be read together with section 23G, which is the negative criteria. The general deduction formula provides for the deduction of expenditures and losses actually incurred during the year of assessment in the production of income that are not of a capital nature and that have been expended in full or in part for purposes of a trade. Remember, section 23G prohibits the deduction of any expenditure that is not for trade purposes. The amounts that relate to capital nature would be dealt with under capital allowances. So similarly to what we did for the gross income, how would you approach a general deduction formula if it's a discussion question? Well, you need to take the scenario that you have been given and apply the elements of the definition briefly. So what we want you to do is take us through the general deduction formula and tell us which items have been met. But you need to identify and focus the discussion on the main issue. So the issue where there is uncertainty as to whether that item has been met or not. So it could be actually incurred. It could be in the production of income. It could be capital versus expenses. It could be incurred as part of the trade. You also would need to refer to your case law that is in your TAT Letter 102. And when you're referring to case law, remember to describe the principle in the case law and then apply it to the scenario. It is very important with discussion questions that you don't dump the theory without applying it to the scenario that is given, because that's where the marks are for the application to the case study or the scenario we've given. And then very importantly, always make sure that you conclude when you are doing a discussion question. So yes, it is deductible under section 11A, or it is not deductible under section 11A because maybe section 23G applies. Having a look at prohibited deductions, take the time to work through these prohibited deductions so that you are aware of them. Like you can see here, 23G is your non-trade expenditure. So that goes hand in hand with your section 11A because they must be read together. As you can see, the restraint of trade payments are specifically prohibited in terms of section 23L. However, under special deductions, there is an allowance based on certain criteria for that restraint of trade. The reason it would be prohibited is because it's seen as capital in nature. However, we need to go and have a look at if there's a special deduction, can we get it as a special deduction if it is prohibited by section 23 or it does not meet the requirements of the general deduction formula in section 11A. Also note the prohibition against double deductions, which is in Silk chapter 6.6, as well as the removing of VAT from the cost of an asset if input tax was available as a deduction, and that's 6.9. All the other prohibited deductions in Silk are under point 6.5.